Hello, you're watching Proactive. I'm joined by Galliford Try Holdings Chief Financial Officer, Chris Hampson. Chris, very good to speak with you this morning. Could you start by giving us an introduction to Galliford Try for those who may not already know you?
Good morning, and thank you very much. Yes, I'm Chris Hampson, new CFO for Galliford Try. Galliford Try is a leading UK construction group. We operate nationally across the UK and we construct critical economic and social infrastructure. What do we mean by that? We mean schools, prisons, roads, affordable housing, and for us, that's mid-rise residential blocks and water infrastructure. Just to be clear, we're not a house builder. And why do we say that? Because our sectors are not cyclical. They have sustainable growth opportunities currently in the UK, driven by aging social and economic infrastructure, which needs to be repaired, improved, and replaced in many cases. We have a reputation for delivering high quality products using modern methods of construction, offsite manufacture, for example, and we use digital tools, including virtual models of the projects we're building. Also worth pointing out that we operate in a very socially and environmentally responsible manner. We deliver social value alongside all the projects that we build.
Chris, today's trading update for the first half of full year 2025 saw a continuation of Galliford's strong performance with an upgrade in your expectation for the full year. What have been the drivers of this strong trading?
So as you say, full year 24 was a very strong year. We grew strongly in that year. And what we're seeing in the new financial period is just a continuation of that. Our strategy and our model continues to work. We've won a number of key projects and places on strategic frameworks in water, building, highways, and our specialist services businesses. And we're pleased to see that our order book now stands at £3.9 billion. Our balance sheet remains very strong. Our average month-end cash rose to £176.4 million. And this is a key part of our model in that customers, colleagues, and suppliers are very attracted by that strong balance sheet. So we're very encouraged by the performance for the first 6 months. And given those continued project wins and improved framework participation, we anticipate revenue and profit before tax the full year to be at the top end of expectations.
Chris, as you said, you've run a number of frameworks in the water sector under AMP8, where the overall market size has doubled to £104 billion expenditure over the next 5 years. How well placed are Galliford to benefit from this huge opportunity? And what does this mean for your margins?
Thanks. Yeah, look, Galliford Try are superbly well placed to capitalise on this opportunity. Both in our asset creation, so that's mainly above ground large asset works in water treatment and wastewater, and for our higher margin asset management businesses, and that's mainly asset maintenance and replacement. And also in our water technologies businesses. We've acquired 4 water technologies businesses in the last few years, and these provide higher margins. So across all of these categories, we're better placed to improve our revenues and drive higher margins. The switch from AMP7 to AMP8 has been smooth, and we have secured all of the desired places on the new and existing frameworks, and we now have 54 frameworks across all of the 13 major water companies. The niche water businesses that I referenced earlier give us a higher blended margin and increased expenditure over the next 5 years form an important part of our strategy towards 2030.
Your new strategy to 2030 has set a target of reaching a 4% margin. Why do you believe there's still a lot of growth opportunity ahead for Galliford Try?
So as I said earlier, the fundamentals of the sector are very, very strong. We have national infrastructure that needs replacing or remediating or improving. And so our strategy is really separated into 2 or 3 key parts. Firstly, we continue to grow the revenue, increase the margin on our 3 big core businesses: building, infrastructure, which is predominantly highways, and environment, which is predominantly water and wastewater. These are all big, long-term, non-cyclical markets in the public and regulated sectors with great opportunities for disciplined growth. Our quality differentiation allows us to deliver better, right first-time projects to customers at higher margins. Secondly, our higher AMP8 frameworks will flow in at higher margins over the coming years, and we have to continue to execute these projects as well as we have done to see those margins flow through. Next, we are focused on growth in our specialist businesses in the higher margin adjacent markets across all of our business sectors. We've also re-entered the affordable homes market, and remember that our definition of this is mid-rise blocks of flats RPs and local councils, and this is expected to unlock growth within the next 18 months. And we are leveraging our geographical and client footprint across the UK, selling more of our portfolio of specialist higher margin services to our existing client base. And as all of this comes together, we'll continue to see our trajectory of growing shareholder returns over the long term.
Chris, finally, could you summarize the investment case for the business?
Yeah, look, there's really good momentum in the business and a track record of delivering profit growth and revenue growth and increasing shareholder returns over the last 4 years. As I say, we have operating robust markets, long-term structural growth drivers, and we have a high quality, carefully selected and growing order book. Our strong culture of risk management and commercial discipline means we're very selective about the work that we take on. As a result of this, our cash position remains very robust, and this helps differentiate us. Customers want to work with us as they know we have the resources to deliver the project. Suppliers want to work with us as they know they will get paid. And colleagues see it as a high quality, responsible and attractive place to work. So we believe we have the right culture, excellent teams and a strong financial position to deliver our strategy. So we are very encouraged by our performance and we are confident about the future.
Chris, I'm sure we'll be having many more conversations in the months and years ahead. Thank you very much for taking the time to speak to us today.
Thank you very much.
That's Chris Hampson, Chief Financial Officer at Galliford Try Holdings.